Risk to reward ratio. Balance equity free margin. Don't be alarmed here. We do not have margin. We do not have free margin. We do not have margin level. We have my free margin. Sorry, we see free margin here. All right. Now, when we're trading to risk to reward ratio, and most of you are learning about risk to reward ratio in percentage format. For me, I feel like percentage is actually not really showing the full scale of what's happening, or you understanding or having the full knowledge on what you have to do and how you have to risk. All right. Okay. When you're risking, remember, when you're risking, you must have a plan. Okay, you must have a plan. All right, the plan is like this: you move from 1 to 2. That's it. Oh, you say 2 plus 2 is equal to what? 4. Simple. Right? Which is you can move from A to what? To B. Simple. That's the plan of trading. Now, when we're looking at the risk to reward ratio, you have what? Sometimes you have 1:1, 1:20, 1:30. You know, depending on how you actually find those lessons and how you actually find someone teaching you that. Now, looking at the risk to reward ratio, we have what? Let's say 10%, and 10% is confusing most of the time, because if you're buying and selling, let's say right now you shouldn't lose 10% of this account. How much is 10% of this account? Let's calculate together. Let's say 194.26 times what? 10%, and which is 10%. It's going to be what? 19. So 10% of this account is going to be what? 19. 42 or 43. Just removing these digits after the comma. Now, here, this is the risk that we should take per trade, which is 10% of the account. Now, if you're risking 19.43, remember, what asset are you going to be trading? What asset are you going to be trading? Are you going to be trading the currencies, which is USD? Are you going to trade the index stocks? Are you going to trade Bitcoin? Are you going to trade cryptocurrencies? What asset are you going to be trading? Now, if you have the asset that you're going to be trading, let's say in this case, we're going to be using Euro USD, which is all of us, we understand. Now, risk to reward ratio, we start from the scratch. First, start from what? The spread. Okay? We start from the spread. Spread is what? It's 0 on Euro USD. We're not going to pay anything. So we're not risking anything on the spread. All right? However, the account that we have might affect us in a way that we're going to pay what? Swap. So this is the fee that you're going to pay in for you holding a trade. If you are day trading, or no, sorry, if you are swing trading or position trading, you're going to pay what? Swap. In some cases, you have an account that is under ECN. You're going to pay what? Commission. All right. Commission is going to be what? Added here on the spread. So meaning there's in case, let's say you are paying $1, which is actually around 18 rand. Now, since now we have that $1, it's okay. We understand the asset that you're going to be trading, and the asset that you're going to be trading, we're going to be looking at in terms of what? In terms of first understanding also the stop level. And getting a stop level, what you're going to do, you're going to go to your asset here. You're just going to tap, and then you're going to go to properties. Under properties, you're going to see something like this. And when you see something like this, you need what? You need to check stop level. Stop level here is 0. And the 0 represent that where you're going to put a stop loss, you can actually easily buy at this price and place a stop loss here. But we know how the graph is going to move, or how the market is going to move. It's going to quickly remove you. So in this case, meaning that you have your own original stop loss that you're going to use, your own specific original stop loss that you're going to use. Let's say in this case, you're risking what? You're risking what? 200 points. Okay, you're risking 200 points, which is in this case, let's say you're risking what? You're risking 19. Just an estimation. This 19 that you're risking here is on what? Under 0.01 lot size. 0.01 lot size. Okay, we understand that one, that you're risking 19 under this of 200 points. Okay, all right. Now, what are you going to profit? You're going to profit what? Okay, when you're looking profit, you have to look profit in terms of, are you scalping, which is S? Are you day trading, which is D? Are you swing trading, which is S again? Are you position trading, which is P? These are the behavioral patterns that we have in the marketplace. And then we have the last one, which is mostly used by new traders and also advanced traders who have not mastered the skill. And this is called what? Gambling. They are gambling. So they actually don't have the exit plan. Remember, I mentioned a plan that you move from what? 2 plus 2, which is 4. So you understand that, okay, your exit plan is that you're going to profit what? You're going to profit, let's say, 30. So if you're going to profit 30, that means that what? You have what? 2 chances again to play next time or trade next time. And looking at the risk there, that is what? You're risking what? 20 to profit another 20, and another, which is let's minus 30 minus 19, which is 11. So that one we can put it as 1:1. However, in percentage format is going to be a bit of like okay, we're profiting, maybe let's say somewhere like we're risking 10% to profit something like 1%. So in percentage format is kind of confusing. Why? Because in most cases we don't deal with percentage, we deal with numbers. So the percentage is kind of, sometimes most of us, we don't understand how we can use it. Though maybe if we understand, here the funny part about it is that if you have $1, how are you going to raise 10% or 1% of this money based on the currencies that you're going to be trading? So now you'll be actually what? You'll be induced that you need more money. But if you're using numbers, then you understand that, okay, this is how I'm going to what? I'm going to risk. So the risk to reward ratio, it should be based on what? It should be based on you getting in the plan, the asset. The plan is going to include the asset, the stop out, the stop level, also the stop loss that you're going to use, and the spread, which is the fee and the commission that you're going to pay, the swap. And then you understand now I'm going to be trading this way, in this way. So be blessed. I love you all. I wish you all the best on your success journey. And for those who need to learn, please reach out to me so that we can actually get more lessons on understanding much better.